Hello and welcome to this latest market alert. My name is David Cheetham, the Chief Market Analyst at XTB UK, and today I want to speak about a major event that's coming up that can have a big impact on several markets. So if we just go to the XStation 5 platform here from the website, I'll talk about tomorrow's Fed rate decision and what impact that could have. So now we're on the platform, we just make it full screen and go to the calendar. You can see if we go forward to tomorrow, which is Wednesday, the 31st of July, down here at 7 o'clock we have the Fed interest rate decision, followed by the Fed press conference at 7:30. Now, looking at what could be expected from this event at the current moment, you can see what the markets are pricing in through derivatives markets, and you can see here there's a roughly 80% chance that we get a 25 basis point cut and a roughly 20% chance we get a 50 basis point cut. So the market at the moment is fully discounting a rate cut. Then the main question is whether that's 25 basis points or 50 basis points. Now this is a really big event because the Fed haven't cut rates in over a decade. So what they do here could have an impact on several markets. It's also worth looking out for what Chair Powell says during his press conference and what the accompanying statement says, because at the moment the market is pricing in another rate cut by the year end, possibly 2 rate cuts. So this is something to keep a keen eye on, and it will be telling really whether, if there is a 25 basis points cut, whether there is any suggestion of more to come or not. So first off, one of the most sensitive markets over these sort of events is gold. You can see here just an example of the last Fed meeting in June. We saw a strong move higher. Now they didn't change rates back in June, but there's pretty strong hints that a rate cut was going to come. Rate cuts or a more dovish message is normally seen as positive for the precious metal. You can see here we had a strong move to the upside of around $20 on the day, and then for several days that follows the market really took off and it moved up above the $1,400 mark all the way up to $1,438 in just the space of a few days. Since then we've really been consolidating around there. We did have another attempt to break higher and hit a 6-year high just a couple of Fridays ago at $1,452. But this looks like a bit of a false breakout for now, and the market has returned back into this range. You can see we've got a rising trend line here in a sort of wedge pattern, and at the time being the market is seemingly consolidating after this sharp move higher. Turning our attention to indices, recently the S&P 500, which is the US 500 on XStation, hit an all-time high of 30.29. We have seen a little bit of a pullback since then. And we're currently trading around 0.5% from that all-time peak. In terms of support areas, this breakout above 29.60 still remains valid, and this is an area to look to for potential support if the market does drop down lower. But similar to gold, after a strong push higher, we're seeing a period of consolidation. If you put indicators on here, for instance the MACD, you can see a little bit of negative divergence here with the lines, and the histogram is in negative territory. But until we really see a negative reaction and a rejection of this level and a breakdown below 29.60, then the downside is limited for this market. Finally, turning our attention to FX, Euro US dollar had a pretty volatile day last Thursday during the ECB meeting, and there is some parallels between the ECB and the Fed. The ECB were expected to deliver a dovish message last week, and they did deliver a fairly dovish message, but the market was expecting more, and this could be seen as a warning going into the Fed just tomorrow. You can see we have this big sort of doji candle. The market briefly dipped down to the 111 area, but this broad support region held once more, and the market bounced back higher. Since then, we've had several days inside that price action. And going forward, I think 111 handle, broadly speaking, is potentially key support, and the highs of those days around 111.87 could offer some resistance. To put this in perspective on a longer time frame, if you look at the Euro US dollar on a weekly, you can see these lows around the 111 handle coincide with these lows in the support region we have here. And if there is a breakdown below there, then there is scope for further declines, and we could see the gap higher that we got back in the spring of 2017 from around 107.10 filled. The recent low for several years is around 103.46, but if we do see a strong push higher in the dollar on the back of this, then there could start to be calls for parity once more. Speaking of parity, there has been some talk lately of pound US dollar dropping all the way to parity, which still remains just under 20% away, but we've seen some real weakness in the pound in the past few sessions, and at present July is set to be the worst month for the market since October 2016. You can see the post-referendum low that we made back at the start of 2017, around 120, is now not far away from the current level. And if we do break down below there, then there's not really much support in terms of swing support from previous price action all the way down further lower. You can see the Brexit vote back in 2016 had this strong move to the downside. Since then, it's been a range trade really, but if we do take out those lows, then the outlook does become more negative. I'm just taking a very long-term perspective here. I think our charts go back to the mid-90s. You can see we're actually at the lowest level, or near to the lowest level, at 120 years since back in the mid-80s. And if we do break down below there, there could be weakness ahead. One final thing to keep an eye on, whilst the Fed meeting is 7 o'clock on Wednesday evening and the press conference at 7:30, the following day we get the Bank of England rate decision, and this could be a big mover for the pound. You can see here at midday, you have the Bank of England rate decision itself, no changes expected, and also the Bank of England quarterly inflation report. But if they do say something along the lines of they are ready to cut rates to support the economy in the outcome of no deal Brexit, then we could see that 120 handle tested and possibly even below. Okay, thanks for listening. Best of luck if you're trading these events in the coming days.